Welcome to Deep Impact Investing with Kimberly Griego-Kiel from Horizon Sustainable Financial Services. In this podcast, we talk about sustainable investing and how your portfolio reflects your values. Do your investments seek accountability from corporations that govern more and more of our society and even the lives we lead? Listen in as we explore the question, are you investing like you give a damn?
Hello and welcome to Deep Impact Investing with Kimberly Griego-Kiel and Johann Klaassen from Horizon Sustainable Financial Services. And yes, you heard me right. I said Johann Klaassen. He's back. Johann, how are you?
I'm doing great, Eric. How about yourself?
I am doing fantastic. Kim has been running the ship, driving the ship, sailing the ship. What I don't know what to say there, but she is in charge. But you're back. And I'm not ignoring Kim by any means, but I missed you, Johann.
Aw, that's sweet.
Hey,
you notice
I'm
he
here
didn't reciprocate
too.
that, Kim?
He did.
He didn't
It's
say-
been so hard.
Yeah, okay.
Aw, I
No.
missed you too, Eric.
Oh, thanks. You're a really bad actor. All right, Kim, how are you?
I'm fine.
Thanks. I missed you too, but we spoke last week, so,
Yeah, that's true.
All right. How do you put up with Johann? Just out of curiosity.
You know, he's actually a really good guy. You know, he has a great sense of humor. So,
He does.
we get along pretty well.
I can give him a hard time.
And, you know, if he's annoying, I just shut my door.
There we go.
All right. Well, we didn't come here to talk about how much Johann didn't miss me. We came to talk about something else.
We did. And, you know, we had a great pre-podcast chat about beer.
Yes.
So, you know,
Yes.
it's always fun around here. But yeah, no, we thought we would have a lovely conversation around the markets and all the fun stuff, the economy, unemployment.
Yeah, you know, with the change of the new year here, it seems like so much went on in 2020, and we wanted to give a little bit of a look back and a little bit of a look forward. Did you know that the month of January is named for the Roman god Janus, who has two faces? One looking backward and one looking forward.
So that's
did
what we're
not
going
know
to do today.
That's what we're doing today. Yep.
Okay. And is Janice, is that a guy's name or a girl's name in this case?
It's a male name, yeah.
Male name. Okay. I've got an Aunt Janice. She
Oh.
was kind of two-faced too, but that's totally different.
In a different sense, I'm sure, yes.
In a different sense, but whatever. Yeah. All right.
That's it. Yeah. So there's your Greek. Is that Greek?
Yeah.
Yeah. So
Roman.
the Greek or Roman. Anyway, there's your mythology lesson for the day. So yeah, that's what we're gonna do. Well, Johann's mostly gonna talk about the technical geeky stuff, but that's the plan
All right.
for today.
Well, I'm
Look
here
back,
to learn. So
look
let's let Johann off the leash and go for it.
Yeah.
Okay, yeah. So in 2020, lots of things happened. We had at the beginning of the year, the markets were moving pretty well. Through early February, mid-February, everything was running along pretty nicely. The S&P 500, which is the Standard & Poor's 500, the 500 largest U.S. companies by market capitalization. It's an index built of those companies. The index topped out at about 3,400, somewhere in that range, in mid-February. Then, as the news about the coronavirus started to hit, the market just slid off the edge of the table.
That's a polite way of putting it.
Yeah, it ended up down about 2,200. So it dropped, more than 30%, 35%-ish during those just couple of weeks. But then, oddly enough, recovered to brand new highs then again in August. And we ended the year up 18.4% on the S&P 500 for the year. Almost 18.5%, despite the fact that we were down 30-something% in the early part of the year.
Mm-hmm.
The S&P 1500, which is the 1,500 largest companies in the United States, it's another index that we use. It covers a broader range of the marketplace in the United States. More companies, so it brings in some of the sort of mid-sized companies and some of the smaller companies as well. That one was up 17.9%. So we're talking about 18% or so up for the year. International stocks outside the U.S. were not as hot as the U.S. markets. They were up, but they were still up for the year, about 7.5%, 7.6%. And the bond index, the Bloomberg Barclays U.S. Aggregate Index, is the sort of general bond market index that we follow. It's about 5.6% up.
So, Johann,
Yeah.
these are some remarkable numbers.
Yeah, this would be a great year. Would have, it's a terrific year. 2020 was a terrific year regardless, but especially excellent if were we to have started the clock at those lows in March.
In March.
The market has been just crazy good. But weirdly, that's really disconnected from the rest of the economy. I think there's a huge disconnect between the economy in general and the stock markets, especially here in the United States. We're seeing
Insert sarcastic comment.
yeah. There's lots of disconnects going on in the world right now, but this one is a big one. There was huge job losses in March, right? We saw, it was just nuts. The unemployment rate rose to nearly 20% in March and April.
Yeah, I just want to comment on that because my son lives in Las Vegas, Nevada, and in that city alone, it was pretty close to 35% unemployment.
Wow.
Yeah, he got laid off temporarily. He's working now, but I believe that was the highest unemployment in a city in the country.
Could be.
Yeah.
It was remarkably bad. Now some of it some of that has come back. I know my sister works in Las Vegas too.
Right. We had that conversation.
in a different casino.
Yeah.
And she was also furloughed, I guess, technically not laid off, but she's back to work now too.
Right.
So some of that is coming back. I was looking at the numbers with the job losses. The official number of total jobs in March and April got back down to the post-recession lows of 2010. So we lost 10 years worth of job gains. And we've only really recovered to about the same levels that we were at in 2015. So even though things are much better than they were not quite a year ago, we're still 5 years, we still have this 5-year lag. We lost 5 years worth of jobs over the course of a couple of months. And we haven't come back from that yet. Unemployment, the official unemployment numbers are likewise back to the 2015 levels. But a big part of that is because a lot of people who lost their jobs in March and April are still out of work and have been out of work for so long that they are now officially classified as probably not returning to the job market.
And so this is very industry specific, isn't it? Some of these job losses.
Yeah, there's some industries are doing just fine. Others are really suffering. So the healthcare industry is doing much better than some others for obvious reasons.
Yeah. And I know construction here in New Mexico is booming.
Right.
I don't know if that's true across the country.
Not sure either.
Yeah.
But I also, the recent job reports that came out just this past week, we lost 140,000 jobs in December. The total job number declined. And almost every last job that was lost were lost by women.
Yes,
women
that is
are being forced out of
problem.
Yeah, so women's jobs are dropping like crazy, and men's jobs are actually increasing a little bit. So a lot of women are being forced out of the job market, and in part, some of that is because women are choosing to stay home to take care of kids and the family stuff. But some of it's their jobs are easier to let go of somehow for the employers.
Yeah, well, I believe a lot of that is the home school issue,
right?
And single moms and that kind of thing, having to stay home and teach their children.
Yeah. So I think when we look at how the economy is doing, and we see that people are not, a lot of people are not working. Right. There's a lot of people out of work, a lot of people who have been out of work for a very long time and may very well never go back to work. It's hard to see in some respects, why the stock market is doing so well. I think one of the explanations that's been tossed around is that, well, here we go, the vaccines that are coming out. People are being excited about the vaccines and the opportunities that those seem to provide for getting back to normal sometime. And so in some respects, the stock markets have gotten out ahead of themselves. They've sort of imported their expectations of profits after everyone has gotten vaccinated. They've imported those expectations back into current prices. That kind of, surely things are going to recover sooner rather than later because of the vaccination opportunities. But it's not entirely clear. So, we're seeing things like airline companies and cruise line companies where those had crashed this past summer. They've recovered a lot of their value already.
Are we seeing that in retail as well?
To some extent, yeah, but not as much. Well, to some extent, the retail has rebounded because of the stimulus money coming from the government, right? So
that whole $600 that people are getting?
Yeah, the $600. Well, it's better than nothing, I guess. It's almost nothing, but it's better than zero. Yeah. And there's a new conversation just in this past week from the incoming Biden administration about their ideas for another, $1.3 trillion worth of stimulus money. So there's an expectation that there will be more money coming.
Right. And, we're recording this just a few days before the inauguration.
Right.
So as this comes out, it'll probably be right after the inauguration. So we don't know what this is all going to play out to be. And maybe there will be more stimulus money. But I find it really curious that the economy has sort of priced in this retail rebound, yet we're seeing a lot of retailers who are really falling short.
Yeah.
And probably closing.
Right. Yeah, I think a big part of it is that the market is playing an expectations game right now. And so, right now, the retail economy is running very slow. Mm-hmm. And there's no particular sign that that's going to change anytime real soon. But there is hope that eventually things will return to normal, quote unquote normal, right. sooner rather than later. And so the prices of those stocks are taking off now. And that doesn't quite make sense to me.
Right. I haven't set foot inside a retail store in
months.
10 months.
Right. Yeah.
Other than a grocery store. I don't know who's shopping in them.
Well,
are you, Eric? Who's shopping in them?
Yeah, I have no idea. I mean, grocery store, absolutely. I've been to my fair share. Okay, I will admit I went to Walmart, I think twice in the last 8 months.
Yeah.
I'm guilty.
Ooh, twice.
Yeah. Oh, I did go into a Home Depot.
Oh, there you go.
But if you were asking me to tally how many things I've ordered off of Amazon,
yeah,
I mean,
I've bought stuff online, but yeah, I mean,
yeah. So I think the market may have baked in good news in general. Better than expected results in corporate profits sometime in the future are already part of the numbers that we've got right now. Better employment numbers are probably already baked in. Vaccination rates, relative calm in the national politics. Maybe we'll get some of that. We can hope.
I did read an article today that said the market is pricing in a calmer administration.
Yeah.
And we hope that we will see that here in the next few weeks.
Right. So good news that might come out in the next few months that would normally boost the stock market might not this time, just because that news is already kind of part of the current valuations. So to the extent that we get good news in the near future, it may not move the market as much as we might expect it to.
Are you talking about things like quarterly report earnings? Those types of things are priced in. So
Yeah,
if they're good news, the market's not going to react.
Right. Yeah. So the expectations on which current prices are based are probably already, it would be hard to outpace those. And even if they did, there would be okay, yeah, good. We were sort of expecting that you would outpace these good numbers that we had already set up for you.
Mm-hmm.
So bad news, on the other hand, could end up being really, any little bit of bad news could end up being really bad. So, if one of the promised vaccines turns out not to have a good efficacy rate, or if we just aren't able to get people vaccinated as quickly as we expect, or if some couple of big cruise line companies or airlines or whatever go out of business, then some of that kind of bad news could actually have a very bad impact on the market because people are expecting good news, right? So It's that much worse. So I kind of think that on the one hand, this coming year, 2021, is likely to be a reasonably good year. I don't think we'll be able to get back to this 17, 18, 19% up. I don't think we'll have another of those years. But we might have an 8 or 9 or 10% up year,
which is remarkable.
That's a good year anyway, right?
Right.
Yeah.
I would find that remarkable after coming off of what now could be a dozen years of pretty good years, with with a negative year or two in there.
Yeah.
But this is remarkable.
Yeah. I do expect that some little piece of bad news, well, not little piece, but some group of bad news is likely to cause a short-term correction, a 10% loss, or maybe something a little worse, but probably not much worse than 10 to 15% downdraft. Is that a fair word to use? Which might give us, but we don't know quite when that might happen, right? There's no good way to predict that. So it's not something that we can wait to make changes to the portfolios or wait to invest, wait for that downdraft. We have to stick with our discipline and go ahead and move forward.
Right.
Yeah.
Because we don't know.
Right.
We never know. There's no crystal ball. We don't know. And I'm always a little bit of a pessimist.
I'm the optimist
I know.
on the team.
Which is why we're a good match. And I still feel that with the economy the way it is, it's still struggling. Mm-hmm. We looking at the unemployment numbers and, possibilities of difficulty in retail, and our restaurants are struggling and small businesses are really struggling. We're hoping there'll be more money to boost small businesses, but that could still take a while. So I still feel that there is a possibility of a negative year.
Yeah, I
think
agree.
it could flip either way.
Yeah. I think, a lot, I don't think we will know until how this year is going to go until we get well into the summer. I think, later this summer we will get some more indications of how the rest of the year is going. But right now, it's just, it's so hard to tell.
Right.
I know there's another round of the PPP stimulus money for small businesses. I know that there's likely to be even more with the new Biden-Harris administration as it ramps up. But we don't know quite what that might look like, quite when it might come out. We can't tell whether it will be enough and in time to rescue some of those small businesses that are about to go under. So right now, when we look at the investment portfolios that we have, we're not invested in the tiny small businesses, right? We can't, That's not something we can do really. But when the market turmoil hit in February and March and April, we started letting cash build up a little bit in client accounts, so that as dividends came in or as periodic contributions came in, we let at least some part of that sit in cash to try and help cushion our client accounts against further turmoil. And that has been, I think that has been a good thing for most of our clients. The idea that yeah, we left some money on the sidelines. Even in a hot year like this turned out to be, we left some money sitting idle. It smoothed the ride for a lot of people, smoothed the ride for most of our clients.
And we had a number of clients who needed extra cash.
Yeah.
And that came in handy.
Right, it did. And so, and it was during the hottest part of, during the most rollicksome, during the wildest part of the markets in March and April, there just wasn't a good way to invest money. When the market was, how many days in a row was it that it was up or down 4% per day? I think it was like 8 consecutive or 10 consecutive market days of 4% moves or more. There's not a good way to place trades when the market's moving that way. It just can't be done. So, for practical reasons and for strategic reasons, we let some money build up. It looks like most of our client accounts actually benefited, did just fine compared to the benchmarks. I was looking at some of the performance numbers, accounts that have a significant portion of their allocation in bonds were still, their overall returns were pushing up against those stock market returns. So, past performance is no guarantee, etc. But
thank you. The compliance officer in me is very happy to hear you say that.
Yeah, I can't guarantee that next year we will also outpace the stock markets, but we had a really good year for our clients too, despite the excess cash held in their portfolio. But we are doing some work now. Brianna and I there's a whole bunch of brand new mutual funds and exchange traded funds and other strategies that have come out in the last few months that we're working to review now and to see, where in our client portfolios we have funds or ETFs or parts of the portfolio that are underperforming. And what we might be able to do to bolster that with some of the new things that are coming in. So over the next month or so, month and a half, we're planning to revise some of our portfolio models and rebalance things, bring things back toward the models that they're supposed to be in, and put some of that cash back to work.
Can I ask you a question?
No.
Of course
yes.
I can.
Please.
I'm always going to ask you a question. To what extent do you believe that some of the good performance that we've had is related to the ESG component, the social impact component of our portfolios?
I actually think that most of it is due to that. I think that the portfolios that we have that are zero carbon energy oriented, those zero carbon energy models outperformed substantially. And so I think, yeah, exactly. So
I just did a yes, woohoo, with my hands.
Yeah. So my impression from looking at those client accounts, looking over the performance reports that we just sent out, I believe that it's some part of that outperformance that I have seen is due to to avoiding the carbon energy. And I think that there's, in times like this where high quality companies outperform low quality companies, I think one of the things that our environmental and social and governance screens do for us is put us into higher quality portfolio. So we end up with in time periods like this when higher quality companies are going to be the ones that survive, that thrive despite the way the market, despite the economy around them, we are going to see even better performance. So
I believe that too, which I was sort of leading you into that, and I felt that was true. So thank you for answering that.
There's also, there's some times when low quality companies and do lead the charge, but that's
it's a shorter term performance thing now.
Yeah. So I think looking back at our 3-year numbers, in some clients, 5 and 7 year numbers, we're seeing some really good really good results.
Yeah.
So I'm very pleased.
Yeah. In the 22 years that I've been in this business now, I see the non-ESG performance, outperformance, we should say, much shorter term now. And screened portfolios for ESG and social impact doing better for longer periods of time.
Yeah. It used to be that there were a handful of sort of anti-ESG mutual funds and other kinds of portfolios that would jump in and crow about their short-term performance, short-term outperformance, and take out full-page ads in the market industry magazines and that kind of thing. But I haven't seen one of those in a very long time, and I think it's partly because the as you say, the short-term outperformance isn't translating into longer-term outperformance for those portfolios.
Yeah.
And we have, the ESG portfolios have the longer-term outperformance at this point.
Yeah, which is great.
Yep.
So, you're doing a great job, Johann.
Oh,
thanks.
Yeah. I think we're doing a great job, so...
Well, our clients are asking the right questions, and we're giving them good opportunities, I think. So it's a fun job.
Yep, helping people make money and save the world at the same time.
Yes, going in the right direction.
All right, so I have a question.
Yep. Okay.
Good.
What
is it?
Are you going to let me ask it? That's the question. No,
please.
Yeah. So here's the thing. Kim, you and I have spoken about a lot of different things in on these last few podcasts. One of my favorites was some of the things that you saw environmentally, when this whole COVID thing really started and was full swing and people were not working outside their home as much and so on and so forth. We talked about carbon emissions were way down. We spoke about different areas where people could see the skyline, right, instead of pollution. Different waterways that had cleared up because of the lack of traffic on the waterways in areas that the main traffic was boats, right? Do you remember that conversation?
Yes, yeah.
That was fantastic, and we love those things. So my question to you is, how do we, as a group of people, continue to remember all the positive changes that came, or positive things that came from us scaling back and kind of forced, into in a lot of cases, but also seeing the benefits? How do we keep that top of mind when the world goes back to normal, quote unquote? As the vaccine comes up, we're seeing this light at the end of the tunnel. And I don't think, we spoke on the last podcast even about, we don't think the workforces are going to go back to exactly the way they were, because too many companies realize they could save a lot of money and their property footprint could be a lot smaller having their people work from home. But still, how do we keep this momentum so that the environment stays as good and gets better, as it is now?
I'm going to say some of this is the new normal in terms of the changes that have happened. So when I think about, if we just look at the workday, I don't know that in our office, for example, that the three of us will be in the office every single day. I think we're going to continue to rotate in the office, and there's not necessarily any reason for us to be here every single day. So that's going to save a little bit, specifically for me, because I have to drive to work. Brianna and Johann can walk.
Yeah,
the office.
We both walk. It's about a half a mile for each of us.
Yeah. But I have to drive, so there's no reason for me to do that every single day, unless I need to meet with someone here, or we need to have an in-person office meeting. I believe that's going to be true for many companies. So we're going to start cutting back on carbon emissions for that particular purpose, and I think it's going to be intentional.
Well, yeah, I think that, how to put it, I think we need to actually consciously design. I think we need to be careful about the idea of getting back to normal, because back to normal, if that means going back to the way we did things before, we don't want to do that.
No.
The way we have done things in the past was not the best. So we need to be very careful to design new processes and decide that we're going to do things in a cleaner, greener, better, more socially just way,
Right.
because we don't want to go back. We need to. We don't want to go back. We want to bounce. We don't want to bounce back. We want to bounce forward.
Right.
Right.
And also, Johann mentioned the loss of women in the workforce over the last 10, 11 months due to COVID. And there's already talk in the social investment arena about how we address that issue. There are some webinars coming up in our organizations about how we look at that and how we get women back into the workforce and what we need to do to address those issues. So those are things that are being looked at. Any of these things that have come up and the cleaner, greener world that we've seen, we're looking at those issues. It's not being ignored on our side. I don't believe it's being ignored on the Biden administration side either.
No, yeah.
So all of that's being addressed. On the issues of health and wellness, it's been discussed in my family that during cold and flu season, I'm probably going to be wearing a mask. This is a new normal. They do it in China and Japan and a lot of Asian countries. They've been doing it for decades. That is normal for them. Why don't we do it here? And I think we're going to see a lot of people who are going to continue to do that.
Yeah. Yeah, as I say, I think we need to it needs to be a choice. We need to actually make the decision that we're going to change the way we have done things in the past. And the new parameters that we're going to put on things are going to be, we have to choose to design our society for better environmental sustainability issues and more socially just issues. We have to do that. We have known for a long time that we need to make some changes in order to improve our future, the opportunity for our future. And here we have a wonderful opportunity to go ahead and make some of those changes that we have known we needed to make.
And that's a positive way to put it.
Yeah.
It's a wonderful opportunity rather than a negative way to put it. So yes.
Well, we've been reading books for 10 years now that talk about how we know what we need to do to decarbonize our economy, to decarbonize our energy infrastructure, our transportation infrastructure, our manufacturing. We know how to do it. We know that we can do it even more profitably than maintaining the status quo, maintaining the carbon-intensive status quo. We just have needed to have some impetus, something that makes it politically possible, really, to go ahead and make those changes. And here we are. We have this crisis that we are in the midst of trying to work our way out of. And it has given us an opportunity to reduce, if not remove, our carbon footprint, and to go ahead and make changes to make our society more just. We have the opportunity right now, and we know that making those changes is profitable, is better for everybody, is good in all the different ways we can imagine, except for some of the entrenched bureaucracy and some of the entrenched powers that be. Some of those folks have to find a new job.
Great. Any other questions, Eric?
No, I love the description of what you guys do as far as, you were kind of sharing, possibly changing work schedules due to you driving into the office and the other members that will be walking, and I expect nothing less, right, from your company.
Right.
Yeah.
My concern is the other companies that are out there that have been hit or have had a tough time during COVID and during the shutdowns and reopens and shutdowns and reopens, that they're going to rush to reestablish themselves and ignore all the positive changes that have been made. So, but the good news is I know that this is what you also watch. This is exactly why you do what you do. And I'm hoping that more and more people will help to hold those companies accountable. Look, you made some serious changes, and your footprint was a lot smaller. How about you keep it that way instead of rushing back to major production and not caring the ramifications of the environment just to reestablish themselves as a business. So I'm counting on you guys. Put some pressure on, and I'll do what I can on my end.
Okay.
We will. Absolutely.
All right.
Johann, any final thoughts?
Well, as the office optimist, I do think that, as we look at everything that's going on, that we do have some tremendous opportunities, even as the market moves around us and isn't necessarily being kind to us. We do still have opportunities to make a difference in the world, to make the world a better place, and to make some money too.
Great. I'm not 100% a pessimist. I do believe that we are making major changes in our world, and I think I get that across on the podcast. I believe in what we're doing, and I believe that we're making so many changes. Mm-hmm. So I just want to say, if our listeners are out there and they want to get in touch with us so we can help them make a difference in the world too, they can reach us either on the phone at 505-982-9661 for those people who still like to call.
Or they can send us an email at info@horizons, plural, SFS, as in Sustainable Financial Services.com.
All right. Thank you guys so much. This is a pleasure. I love the optimism. And Kim, I love the fact that you kind of play the opposite side of the coin sometimes just to get them to answer those questions, because it was perfect. So thank you so much for both of your time today.
Thanks, Eric.
You bet. And of course, last thank you goes to you, the listening audience. We wouldn't be here without you. Thank you so much for tuning in and listening to the Deep Impact Investing Podcast with Kimberly, Griego-Kiel, and Johann Klaassen. If you have not subscribed to the podcast yet, please click the subscribe now button below. This way, when Kim and Johann come out with a new podcast, it'll show up directly on your listening device. This makes it much easier to share these podcasts with your friends and family. Again, thank you for listening today. For everyone at Horizon Sustainable Financial Services, this is Eric Johnson reminding you to live your best day every day. And we'll see you next time.
Thank you for listening to Deep Impact Investing Podcast, the sustainable, responsible impact investing podcast that shows you how to get your voice heard. It's time to start investing like you give a damn. To ask a question that we can answer on an upcoming podcast, email us at info@horizonssfs.com or join the conversation on Facebook at www.facebook.com/Horizons Sustainable Financial Services, or give us a call at 505-982-9661. Don't forget to click the subscribe button to be notified when new episodes become available. The companies we may speak about during our podcast are not recommendations for investment only. You and your financial advisor can determine what the right investments are for you and your situation. Horizon Sustainable Financial Services is a registered investment advisor, registered with the state of New Mexico, and other jurisdictions were registered or exempted. The information covered and posted represents the views and opinions of the host and or guest, and do not necessarily represent the views or opinions of Horizon Sustainable Financial Services. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning.